Hello, traders. Because of Vinny coming to you from theclosingprint.com, Sunday, the 17th of September, with your weekend video newsletter. We see the markets issuing a bit of caution. Most of our indicators are either bearish or neutral going into this week, as the S&P 500 dropped marginally below the 50-day moving average, telling us to be more cautious going into this week. The S&P 500 is tracing out what looks like a head and shoulders top. We are 3.5% below the July pivot high at the head. RSI did drop back below 50 this week, so we're a bit cautious. We're going to look for direction from institutions after dealers' hedges came off last week. OPEX now sets up a week of more volatility and wider ranges. If we do pull back, 4,400 is a major support level. Then you get this neckline at about 4,350. MACD is flat. Stochastics has yet to reset down below 20, but that could happen early this week. And another reason to be cautious to start on Monday. In addition, we see the Q's RSI is dropping below 50. We have that similar pattern. Looks like a head and shoulders top. After gaining nearly 54% from the October low, we are tracing out some more consolidation while trading right at the 50-day. So keep an eye on the markets on Monday to start as we look for direction from institutions and dealers on Monday. Small caps are also under pressure with the IWM Russell 2000 sitting right on top of the 200-day moving average. For now, we're in the upper half of this sideways range that we've been tracing out since 2022. So this is more neutral to bearish at the moment. 5 of 9 sectors in the small caps that were neutral to slightly bullish last week, and we had 4 of 9 that were bearish, with 8 of 9 below their 21 and 50-day moving averages, except for small cap energy. New York Stock Exchange high-low is below the zero line, so that's a caution signal as well. Advanced decline is flat but near the highs that we've seen recently, while the New York Stock Exchange continues to trace out green and blue elder sticks, all of which are neutral depending on what happens on Monday and Tuesday to start the week. Growth stocks have been performing very well to start the year. Continues this uptrend. We've seen a fade over the last 2 weeks as growth pulled back below its 21 EMA, along with value stocks. Therefore, another neutral and cautionary signal. The S&P Equal Weight Index remains above the 200-day. We either lose it or we bounce on Monday, Tuesday, with the number of stocks above their 50-day pulling back, as well as the number of stocks above their 200-day in the lower panel, and about 35% on the 50-day. Advanced decline percent also remain near neutral. They're neither bullish or bearish at this point, staying right at the zero line to end the week. While the McClellan oscillator shows breadth is improving, we've created this trough and continue to slide to the upside, so we'll be looking for this to either continue or to peak going into these last 2 weeks of August. For now, we have 8 bearish indicators, 8 neutral, and 4 bullish to start Monday trading. Here we have yields, the 2s, the 10s, 20s, 30s, all making higher highs and higher lows. That's putting pressure on the stock market into this week's FOMC on Wednesday, with junk bonds and high-yield corporate debt more neutral but still in a bullish trend. Therefore, I'd be more bearish if this dropped below the 50-day. That would be an early warning sign. Look for a bounce if you're bullish. Between yields and the dollar, we'd really need to see the dollar pulling back. Commodities like copper are also neutral in this sideways range. Since May, we haven't made much progress. This is tied to leading economic indicators, so if you're bullish, you want to see copper continue to move higher. Crude oil also problematic for U.S. equities. The longer we continue this bullish trend, the more pressure it puts on equities, in particular transports, which have reflected that bullish trend in crude oil by dropping back to the 100 period moving average. 200 day is right below. We also saw the airlines weakness as crude oil climbs, along with the Dow Jones U.S. Rail Index. Rails also peaked back in July and continued to drop. We got a little bounce last week, so maybe we'll see a counter trend rally into September and year end. Sectors are neutral for the most part. We're looking for stochastics to turn and continue turning for most of these sectors. If we continue to see weakness, we'll be looking for consumer staples, utilities, and healthcare to push higher. For now, they're neutral as well, with energy starting to see some profit taking. The IBD 50 for this week, we're looking for Arbor Realty to continue this bounce that it started on Friday. Volume picked up, stochastics turning. Relatively inexpensive real estate candidate with similar price action from REITs and real estate stocks like Vornado, Jones Lang LaSalle, and Boston Properties last week. Apollo Global, from the last couple of weeks we've had on the watch list, continues this bullish trend. Stochastics embedded, volume keeps picking up. Argenx, also from previous watch lists, looking for stochastics to continue this turn and price to pull away from the 21-day. Braze Inc. is another candidate that looks very interesting. It provides customer-centric interactions between consumers and brands. It's a cloud-based platform. They're based out of New York City. With the stock starting to turn on the weekly time frame, it IPO'd back in 2021. With the stock above its 10 EMA, we're looking for this continuation after the IPO for this to turn back up. That would signal that institutions still believe the company has potential. Fund ownership doubled in the last quarter between March and June. So we'd like to see that continue for BRZE. Caterpillar is also holding on to its 21-day. We're looking for these industrials to continue their performance, have RSI turn back up. For now, we're just neutral on Caterpillar. Clearwater, the name is a bit misleading. The company actually provides solutions for investment data integration, accounting, analytics, and reporting services. Think AI in the cloud. Earnings are growing 33% in 2023 as the company continues to garner institutional buying, as you can see with the volume increasing, stochastics rising, MACD above its signal line, RSI near 70, and showing relative strength when the market was pulling back. So we'll keep an eye on Clearwater Analytics, CWAN, looking for a follow-through and a break above these levels at 20 to indicate that we could see more upside in the short term. DraftKings continues its trend along the bullish 10 EMA. We took a break last week, looking for a follow-through this week. Fabrinet at the 21-day moving average. Stochastics oversold, looking for a bounce from this contract manufacturer of switches, cables, receivers, mirrors, and laser components for the electronics OEMs market. The company has estimated earnings growing to $8.25 for 2024 and $9.70 into 2025. Currently, the company making $7.67 with a earnings beat on August 21st of 1.4%, percent change 11%, volume picked up. Now after this consolidation, after that gap up, we're looking for a follow-through. Volume picked up again on Friday. Watch for stochastics and MACD to turn. GSHD, Goosehead Insurance. It's a holding company for Goosehead Financial, LLC, that provides personal lines of insurance services in the U.S. 2023, the company had a 105% increase over 2022, making $1.13 per share. Estimated to make $1.58 in 2024, or a 40% increase, a growth rate in the company of 38%. We're looking for a breakout on this daily time frame, as volume indicates institutions have been pretty active. and to fill out the right side of this pattern over the next year or two. Modine, another candidate that has stochastics oversold and starting to turn. We're looking for this company that manufactures thermal management systems for the automotive OEMs and the building, industrial, and refrigeration industry groups to continue. 2023, the company made $1.95 per share in earnings, forecasted to make $2.89 in 2024, a 48% increase with a growth rate of 5%. Relative strength line is at 99, so look for Modine to bounce back above the 21-day, which would indicate institutions are still accumulating shares. Novo Nordisk, keep an eye on this one. If it loses the 21-day, I would stop out and take the position off if you're holding it for now. Pinduoduo, strong price action on this Chinese provider of third-party mobile e-commerce platforms for buyers with merchandise and shopping experiences. Look for PDD to continue higher. 2023, the company made $4.05. 2024 forecasted to make $5. Building out the right side of this cup pattern, the volume suggests institutions have been accumulating shares. While it remains above its bullish 10 EMA, Remitly Global, interesting company, provides digital financial services for immigrants through cross-border remittance and banking services. This one's breaking out with earnings of 20 cents per share in 2023, forecasted to double to 41 cents per share in 2024. With the stock in a bullish trend, 921.50, 200-day are all up and to the right. We got huge volume on Friday, not related to earnings, as RSI continues above 50, showing strength of trend. Okay, traders, that's going to do it for me for this Sunday, the 17th of September. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. I'm going to get outside and enjoy the rest of my Sunday, while I'll have you look at some of these names on your own. IBD stocks showing relative strength, and stocks from the Swing Trader, Alerts, and New America, looking for follow through this week. I'll send out a watch list later tonight around 12 midnight on the East Coast, around 9 o'clock on the West Coast, so be sure to check your inbox for that. Otherwise, enjoy the rest of your weekend. Take care, and we'll see you on Monday morning. Ciao.